All right, hello and welcome to another daily edition of Stock Market Mutterings for November 2nd, and I'm back in the saddle again. That's right, I got myself a nice little green day today. Not enough to make up for yesterday's fiasco, obviously, but kind of chipped away at it, chiseled away at it. It's a step in the right direction, and as the saying goes, the journey of 1,000 miles begins with a single step. So it's a step in the right direction, and we'll see how it manifests throughout the rest of next week. So we're going to talk about the way today's trades went. It was a nice, for lack of a better word, I'm going to use easy, because trading's never easy, but it was an easy day emotionally for me. Kind of hit a couple of good trades right out of the open, and I was like, peace out, because I had some options expiring. So I really didn't want to have a stressful Friday, especially after all the wild whipsaw action and the effort put into making some money this week. I was looking for to coast right on out into the weekend, and that's what I did. So we're going to talk about those trades, and then let's talk a little bit about what this thing's going to do. So here's what happened. If you were kind of following me on Twitter, if you guys are on Twitter, I'm at the Lincoln List. Just follow me on Twitter. I'm sitting there looking at charts. It's like 9 p.m., 10 p.m. or something like that here on the West Coast. I know it's 1 o'clock in the morning there on the East Coast. All of a sudden, I'm just sitting there looking at charts, and the futures go berserk. I mean, they just spike right here. It's like 1 o'clock in the morning on the East Coast, and they just start ramping and ramping. They ramped all the way up until I'm going to bed. I don't know what this is. Can't find anything on it, but it's just rolling. Now, I usually get up about 4:30, 5 o'clock in the morning on the West Coast. What is that? 5, 6, 7 o'clock in the morning on the East Coast. So it's still kind of holding up here early on. And I'm like, man, this market, it's just vicious. Now we're on day 4 of this rally, and we're above the 200 moving average. I'm like, we're not gonna V-shape this thing back like it's Brexit or something. I'm like, if we I'm just telling people in the room, look, if we start ripping in the morning, I'm shorting again. I know that we had some trouble with wind yesterday. But for the most part, all through October, up until yesterday, it's worked like a charm. So we had one bad experience here. We had one little bad trade. Let's not judge the whole entire month and a half of trading off of one. So I was like, if it goes again, we'll give it another try. Maybe we won't do win again, but maybe we'll try somebody else. So the one that looked really nice to me was this SQ. And I said, you know what, if this SQ starts ramping up and takes out the pre-market highs, let me back this chart up just a little bit. I said, I'll do this one right here. If it gets vertical, gets up around this 70, 79, 80 area, I'm going to try a short on this. Now, the reasoning behind that is because I know I talk a lot about shorting some of these parabolic moves early. And I want everyone to understand this. It's not about whether the company's good or bad. It's a short-term change in a trend. And I don't even want to call it a trend. Those who follow me all the time know what I'm talking about, but for those that might be tuning in or forgot, there's this element of price versus time. Anytime that you get too much price increase over too short a period of time, you're probably going to get a snapback reversal. Same way when the market goes down or stocks go down. If they panic out too fast, and there's too much panic, and there's too much price decrease over a short period of time, they often bounce back. So that's what you're looking at. That's what happened. The market sells off, it gets really vicious, and all of a sudden it bounces back viciously for 3 days. So what we're looking for is just a quick change here and a nice sweet little pullback. This thing goes vert. It gets right exactly where I need it to be. I go in with a starter position, and it just drops. As soon as it drops a buck, I'm out. I am out. I didn't do a partial. I didn't do any of the other stuff because I'm like, you know what? I'm bagging me a gainer. I got a $1 gainer first thing in the morning. I was in the trade for all of maybe a couple of minutes. It was probably longer than that. I'm just assuming it was a short trade. Short trade as in shorting the trade, and a short trade as in duration. I was in it. And usually when they work out real quickly for you like that, I like to take the money. So I grabbed the quick dollar. Of course, it went down a little bit further, and that was actually shorted it pretty damn close to high of day. And the stock held up well, but there was a little bit more money in it, but I wasn't going to complain too much about it. And that was like my day, pretty much my day right there. I had some options that were already expiring. We do a lot of selling calls and selling puts in the room. So we had some stuff that was expiring in the money there, and that was good. And it wasn't until later on I grabbed a little bit of old Ed. Now, I was also talking about on Twitter about how this thing had a really good 97 breakout. I mean, this thing gets shellacked after earnings. But if you look here, One of the things, especially for the newer traders, aspiring traders and everything, remember it's all about levels. It's all about price. It's all about time. It's all about levels. And just like you had too much price increase on SQ over a short period of time, that's understandable. It's going to pull back a little bit. Here, after this thing got washed out after earnings, it held up this 95, gets a little sell in the morning, and then it starts building. If you look real close here, you got one peak right here. Then it kind of pulls back, challenges that again, makes that a little bit of a double top. A little bit hard to see on the small chart. And then it just kind of pulls back, and here's your third shot. So it's by the third time this thing really tries to press through 97. I'm like, this is a long. I didn't take it because I really didn't want to fight with a long at that point. Or I really wasn't interested in taking a trade at the moment. I'm not embarrassed to say that. It's like, I see it. I told everybody in the room, you guys probably want to take this thing. You can put a stop down there at 95 bucks, see where it goes. I think it's got room to 100. You can look at my Twitter. It's exactly how I called it on Twitter as well and social media. I said, let's probably go to 100. And there it just ramped right on up to 101. Now, once the ramp started getting violent, and I'm sitting there and I'm like, well, you know what? I kind of felt bad. I'm like, I guess I should have took that one, right? You always wish you should have took that one. So I said, you know what? I think I'm going to short. I'm going to short this ramp. That's what I'm going to do. And that's one of the reasons why I do like to short, because it's hard to miss a short. It really is. When you're doing something like this, that's where it kind of originated with me, was I kept missing these breakouts. And it's like, well, I guess I have no choice but to short the breakout now. So we go in here. I even tweeted this. I said, it's a short now at 101. And we shorted at 101, and we picked up a couple of bucks on it. I did a partial on this one because I thought, well, maybe the market's starting to press down a little bit. And maybe it'll roll over, and I got stopped out on the last piece. So that was it. That was officially it right there. I did not take another trade. I was pretty much done for the day. I just did not want to get into a battle. And like I said, I had some good amount of options premiums expiring. So that was nice. That was a good day. So again, got a nice little piece of yesterday's loss back, and that's a good start. So really, I wasn't looking to set the world on fire. Just try to coast into the weekend low stress and low key. So what are we going to talk about now? What are we going to see? The timing of some of the stuff in this market is bizarre. Yesterday this market really got a hefty lift off this so-called meeting on these tariffs. This started months ago about this meeting coming up about China and the U.S. with tariffs. And yesterday it was like, the tweets came out. It looks like it's going to be a good meeting. Things look good. And the market really took that into consideration and ripped. Then you got this Kudlow fella coming out today saying there's no deal. We don't have anything drafted. There's going to be more tariffs. And it's just like the timing of that event was just, let's say, bizarre. I mean, the market was already smoking down here. And then this thing comes out. It's like, you've lost almost, if you go back up here, this is the Dow I'm looking at. You're at 25,670 area, 660s or something like that before the market opens. And then you're all the way down here at about 25.1. You've ditched about 500 points on the market, and then you're going to throw out some sauce right there at the end. Like, well, what for? Could that wait? Could that wait till after the markets? That was just really bad timing on that, and the market got hit a little bit. And I mean, that's what we're looking at now. What did we see today is we saw a 500 to 600 point reversal at one point in the market. So that's still telling you that even though we had a bullish series of days, there is still sketchiness in the minds and thoughts of traders and investors because the volatility is still very, very high. And you saw these things break apart. Much of this probably had to do with Apple disappointing, pulling back a little bit here, kind of soured the rest of the tech. It wasn't so good earnings season. When you look through the earnings season, it has been dynamite for a lot of these stocks. But then you come back and you look at some of the FANG names like Apple, Netflix, Facebook, Amazon. Their earnings weren't perceived as well as they had been. And that was really hindered the NQs because it just clawed its way back to the 200-day moving average. And then it finally pulls back a little bit. So as we look to next week, again, I can't tell you where it's going to go. I can only look at levels. That's why we look at price, because we need to make a decision at some point. First off, you got to look at this low right here, which is, let's just pull up the SPY, since most people probably look at that. you got to keep up this level of 269s, mid 269s to 270. You're going to have to hold that early on. If that starts to get challenged and you see that these bounces are weak, so this would be like a weak bounce. The market's high in the pre-market, it pulls back, it makes a rally, it falls very short of highs, and then it re-rotates, makes a new low, tries to gather itself, bases, tries to take off again, then immediately gets sold off. Those are weak rallies. Those are lower highs. That's a sign of extreme, not extreme bearishness, but that's a sign of weakness and bearishness inside of a chart. If you want to know what is bullish, it's flip it upside down, and that would be bullish. But you're seeing these kind of, and not only that, it makes a new low. So if you see that type of action, and then finally, after a couple attempts, 269.5, 270 goes, I would expect that you probably rotate back to where we were trading on Wednesday. Probably somewhere inside of this gap, which is 268s and 267, somewhere into that gap. And then we'll go from there. If it continues to get weak, I would see you're probably going to be back at 259 if it shows that. If it can hold itself, then possibly the market will stabilize a little bit. Some of the volatility will come back, and then it will pick a much clearer direction and be a little bit, let's say, a little bit quieter, a little bit smaller moves, a little less erratic. Now, the 200 moving average is not too far away here at 276. So, if we get back up there and it starts clawing its way around here, starts messing around up here a lot, then you can think, okay, well, you know, because it did make a nice little recovery there late in the day. So maybe it'll claw its way back above the 200 moving average, and then you can start talking about the highs from October 16th, October 15th back here, where the peak of the last rotation, and you can look at those. So that's kind of my outlay of the market. We'll see which direction it decides to take. I would look at that as well as for a lot of different stocks that have been moving. So like if you start to see something here like this iRobot, for example, this is a stock that's been down significantly, bounces off of its 200 moving average, and it did so significantly, 79 here to 97. So you're talking almost a $20 move this week coming off the bottom. If you start to work your way up to this 50 moving average, you get this euphoric push in the morning. Let's say that's what it is. These are the types of stocks I look for that's made these large moves, and as they start to border into resistance, into gap fills, into moving averages, and I'd say I'd be a short seller somewhere close around there if it gapped up and started the day. And I think if you begin your initial short there, it's pretty good. On the flip side of those, if they happen to really get hit heavily in the morning, then they make themselves also pretty good trades. Even stuff like OLED, they got just absolutely destroyed. Found yourself a pretty good long there somewhere throughout the day. You just kind of have to wait for these things to set up and get yourself in the right kind of position. And I think when you got the market like this, rather than trying to pick tops and bottoms, which you should never do, is just kind of hash out your plan there and look at these levels. Build a plan around those levels. So just like something like that iRobot, you say, look, if this scenario plays out, this is what I'll do. If this scenario plays out, this is what I do. If neither one of them don't play out, then I don't do anything with that trade. I'll have to find something else that's possibly setting up. And of course, who knows what's going to happen on Monday. So I kind of like that one there a little bit. Let me see if there's might be a couple of these other ones. I like this WUBA too, also as a short. Some of these have really, really bounced hard. I know they got earnings coming up, so I don't want to kind of tangle with that a little bit. But I do like these two. Some of these I think that have made some really strong bounces off. If they start getting a little bit hefty in the morning, just like SQ's trade today, that's just textbook. If they start getting really high in the morning, you see that euphoric push early on, I think I'd look to short them, because then you'd be looking at 4 to 5 days consistent of a rally on these, and what I consider might be a bear market right now. That's the route I'd take. So I'm going to leave it at that because I want to start my weekend, man. I want to start my weekend. I'm getting out of town, dudes. Hitting up the woods. Yeah, that's right. Maybe I'll grow a beard. Eat some leaves and dirt. I don't know what I'm going to do. Anyway, enjoy your weekend. Thanks for watching this video, supporting this channel. If you like the video, click that you like it. Subscribe to the channel if you want to keep up. I'll continue to do these market mutterings as long as you guys like them. If you have hints, tips, or suggestions, send me an email to support@thelincolnlist.com. Take care. Have a great weekend. Talk to you Monday.